Hi there, you're watching Market Cafe on ET now with me, Shreyanti Singh and Srishti Sharma. And over the next 1 hour, we'll get you updates from within the country as well as across the globe, tell you which stocks you should be keeping on your radar bright and early this morning. And while speaking of stocks, we've got to take a look at the handover coming in from Wall Street. Another weekday.
Well, certainly a sharp sell-off, what we have seen in the US markets, Shreyanti, and all these Trump favorites that we have been talking about, they are declining, and case in point being Tesla, which actually was down 15% in yesterday's trading session. Well, of course, there were triggers around the weaker volume and the profitability outlook, but other than that, on the overall markets for the US, we have seen a nosedive. What we have seen is that over 2% decline coming in on Dow Jones. Even Nasdaq was actually down significantly. A 4% cut on tech-heavy Nasdaq is what we have seen. And other than that, what fears were actually market was having was related to the recessionary fears. Other than that, what we are getting to see that all these tech-heavy counters, they were down in trade yesterday. So all in all, not a great day coming in for the US markets. The handover seems to be really weak, and what we see right now is GIFT Nifty also indicating a cut of 172 odd points. So let's see whether or not Indian markets try to recoup some of those gap down indication that GIFT Nifty is showing rather. But yes, of course, it's recessionary fears and economic concerns that is definitely weighing heavy on the global markets and of course on the Asian markets too.
Well, absolutely. That's what we were looking at bright and early this morning when it comes to the handover coming in from the Wall Street. But when you take a look at oil as well, it's been quite an interesting move as far as oil is concerned in terms of what we've seen of late. Because when you largely take a look at oil prices, of course, for Friday, you did have that very good sort of handover coming in, or rather like a decent handover at that point in terms of what happened on Friday, but a fall to the tune of 1% for both Brent and WTI is something that you've seen coming in as far as the session on Monday is concerned. When you take a look at oil prices, when you take a look at Brent, then you're taking a look at a loss of just about 1%, $69 a barrel is the kind of level that you're looking at as far as Brent is concerned. When you take a look at WTI as well, $66 a barrel is the kind of level that you're looking at. So a little bit of sluggishness as far as prices are concerned. You did have last week that marked WTI's 7th consecutive weekly decline, the longest losing streak also coming in since the month of November in 2023. So Brent, of course, also fell for a third consecutive week. That's the kind of handover that all of this is against. And you have a whole host of factors from OPEC Plus's output hike. Other than that, there's commentary coming in as far as tariffs are concerned, and even on the war front, there's a lot of uncertainty at this point, lingering uncertainties, and that is something that oil is taking a look at then, Srishti.
All right, but keeping up with the news flow on the rout in the US equities, the White House, which has downplayed the week-long market rout, has now insisted that the recent word from businesses suggests a brighter outlook for the US economy. The White House appeared to be using the term animal spirits to suggest that the sell-off was being driven by irrational fears and negativity. The sell-off intensified and remember has now entered its third week. But earlier we caught up with Jeff Dennis, who is the independent emerging markets commentator, as he shares the key factors behind the steep sell-off on Wall Street. Is this a good time for investors? Make a fresh buy? Let's go across and listen in.
I don't think it's a buying opportunity at this stage, certainly not a short-term buying opportunity. I think there are three things that are really hurting the market right now. First of all is the really serious growing fears that there is going to be a recession in the US. The data is terrible, frankly, recently, particularly some of the soft data, consumer confidence, business confidence. Secondly, there's massive uncertainty being created by the on-off, how much, who's going to get hit by tariffs, and what's the retaliation going to be like. That just freezes investment and probably investors too. And then thirdly, the other point I think is worth making is that the Fed really doesn't have a lot of room to cut rates here.
All right, then let's keep it going with commentary then, and shifting focus to important commentary then. BlackRock top boss Larry Fink has said that inflation in the US may be elevated by nationalistic policies, including the deportation of workers. In fact, he also added that the markets have in fact been discounting inflation and that there will be further cost increases. over the next 6 to 9 months. Pink, in fact, also alluded to mass deportations leading to problems in the agriculture sector as well. So that's some key commentary coming in.
But important word coming in from the US Central Bank Fed Governor Adriana Kerger, who sounded warning bells signaling that the Fed should keep rates steady for the time being. Now, detailing her rationale, she expressed worries over the persistent nature of inflation in the country, and looking ahead, she does expect prices to shoot up. Touching on the frequently changing developments surrounding the US administration's decision to impose tariffs on goods imported from key trading partners, including negotiations and potential retaliatory moves, the Fed's Kerger said that there was still considerable uncertainty.
But then moving on, this is a morning where there's a lot of commentary to look at. The US Energy Secretary Chris Wright also said that the US could reach an agreement with Canada that avoids tariffs on imports of oil, gas and other energy resources. Wright also said that such a scenario certainly is possible, but it's too early to say. In fact, he also added that the US is in active dialogue when it comes to both Canada as well as Mexico.
But worrying trends for the US automaker Tesla amid the deepening sell-off on Wall Street. The Elon Musk-led company has now logged its worst day since September of 2020, plunging as much as 15%. The stock, in fact, wrapped its seventh straight week of losses. That, remember, is the longest losing streak since debuting on the Nasdaq back in 2010. Now, the stock has fallen every week since CEO Elon Musk went to Washington, D.C. to take on a major role in the second Trump White House.
Alright, and those were some global news and updates to look at. And as we sip on a cup of tea rather at this point, it's time to go in for a very short breather. We'll see you on the other side with the handover coming in as far as Asia is concerned. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's get your check going as far as the Asian markets are concerned. And you do have at this point Japanese markets leading losses in the region. You do have Nikkei that fell 2.7% thereabout shortly after the open. Currently on your screens, as you can see, it's down 2.4%. When you take a look at South Korea's Kospi as well, even that one is holding on to a tinge of red at this point, 0.6% downtick coming in as far as Kospi is concerned. Australia's ASX 200 also fell just about 1.5%, currently down about 1.6%, reversing course from gains in the previous session. So that's the handover as far as ASX 200 is concerned. Hong Kong's Hang Seng Index also down at this point, 1.5% downtick thereabout, coming in 1.6% downtick as far as Hang Seng is concerned. And even for Shanghai, as you can see, 0.5% downtick is what you're looking at there as well. Now, of course, back home, we shut shop around the 22,460 levels. And currently, in terms of what is being penciled in, it's a rather muted start that we're looking at. It's a very weak handover as far as Wall Street is concerned. A very weak handover as far as Asia is also concerned. So not a very good start is something that we're penciling in at this point, Srishti.
Welcome back, and today, of course, once again, private lender IndusInd Bank will be in focus today as we learn from our sources that RBI is closely viewing the derivatives portfolio issue. Let's go across to Ankur for more details.
Yes, sources say that Reserve Bank of India is keeping a close eye on the IndusInd Bank's derivative issue. In fact, we have been told that any action, if at all taken by Reserve Bank, will be after the thorough investigation, the review of the whole matter. The bank is already investigating the matter, and an external agency is hired. We have also been told that the matter, the full investigation is likely to be completed within 2 to 3 weeks. But the whole issue of getting only 1 year extension for Sumant Katpalia as MD and CEO is likely to be linked to the matter, because the information about the discrepancy was already sent to Reserve Bank before the extension came. In fact, Sumant Katpalia has clearly said that it seems that Reserve Bank is uncomfortable with his leadership and hence 1 year extension came. But other than that, he also mentioned that business as usual will continue for the bank. He doesn't see any problem with that. And what about the next successor of the bank? He clearly mentioned that it can be internal as well as external candidate for the bank.
Alright, thanks Uncle for getting us all of those important details bright and early this morning. Tell you what, let's move on. Derivative accounting discrepancies in IndusInd Bank may lead to erosion of net worth of up to 2.35%. While the bank expects this to impact its Q4 earnings, let's also go across to Sharad, who's standing by with an update on what the brokerages are then penciling in. Sharad, over to you.
Well, a negative tone coming in for the brokerages. Nuvama, they have downgraded the rating and this is coming to reduce from hold, and even the target price has seen a significant cut from 1115 to only 750. That's more than almost, you could say, 30% cut in the target price. Now, of course, the bank has disclosed a negative post-tax impact of almost 2.35% on the net worth coming from the markdown of these derivatives. Now, these internal trades, they pertain to almost 5 to 7 years of up to 31st March 2024. After that, it has been stopped. Now, these adjustments also include internal forex derivatives adjustment on the bank's borrowings as well. Now, the timeline is discomforting and certain points have been raised by the brokerages. The CFO resigned just before the Q3 earnings. The CEO recently, the CFO actually, you could say, resigned just before the Q3 earnings, and the CEO recently just got 1 year extension instead of 3. Now, they believe that IndusInd Bank's credibility and earnings should be impacted. Even a note, IFL also stated they maintained that, but they have reduced the target price from 970 to 910 rupees per share. They have stated that these discrepancies would be hitting the overall net worth by 2.35%, and the resultant impact will be routed through the PNL and likely to be taken in the fourth quarter of FY25. Now, given that the MFI slippages are likely to further rise sequentially and NIMs are likely to contract further in the fourth quarter as well, they are estimating a 35 basis points of CET1 ratio hit with the pro forma CET1 ratio of 14.8%, but it should not necessitate another round of capital raise. But overall, the tone is bearish when it comes to the brokerages for IndusInd Bank.
All right, thank you so much, Sharath, for getting us all those details. So let's watch out for IndusInd Bank specifically, because just yesterday we have seen over 3% cut coming in. Let's see how the stock reacts today. But moving on to an ET Now exclusive then, wherein our sources tell us that a meeting was held between the government and steel industry, and as government is working on safeguarding the measures to protect the industry, sources also say that the United States' decision to impose a 25% tariff on steel import is not expected to have a significant impact on the industry. Prakash Priyadarshi joins in with more details. Prakash.
Yes, we are learning from our sources that the government is working on safeguard measures to protect the interest of the domestic steel industry. We are given to understand that various options are being considered amid complex geopolitical scenario. However, government sources are indicating that the latest decision by the US to impose 25% duties on steel imports is unlikely to have much impact on the Indian producers, as India's steel exports to the US are very low as compared to other countries. But the one thing which is very concerning at this point of time is, of course, increased competition in the global market. Sources are indicating that the Indian producers are likely to face increased competition in other countries, and therefore a meeting was held with all these stakeholders to address this issue going forward. In fact, Commerce Ministry has held several rounds of meeting with the various countries to protect the India's interest. In addition to that, when it comes to imposing safeguard duties to protect domestic industry from heavy imports of steel, sources are indicating that the investigation and review process is underway, and safeguard measures will be announced when the final investigation report submitted to the government.
All right, thanks Prakash for getting us all of those important details. Moving on then, Maharashtra's Finance Minister Ajit Pawar tabled the Maha-Yuti government budget for 2025 to 26 fiscal year. State government in fact announced its plan to increase motor vehicle tax rate by 1%. Apart from this, you do have the Finance Minister also announcing mega projects to also boost infrastructure as well as tourism. Anurag Shah is standing by with some more details. Anurag?
New Mahayuti government of Maharashtra presented their first budget and it was 11th budget presented by Finance Minister Ajit Pawar. So total budget is of 7,20,000 crore with a revenue receipt of 5.6 lakh crore. In his budget speech, Ajit Pawar mentioned that fiscal deficit is below 3% and the focus of government is on infrastructure development and job creation. So main highlights of announcement by Finance Minister of Maharashtra is that there is a outlay of 8,200 crore for urban waste management and recycling. Other than that, 5,000 crore for expanding irrigation. A most important announcement which was expected in the budget was to increase the Ladli Behna amount from 1,500 to 2,100, which was not announced, and the overall outlay for the Ladli Behna scheme has been reduced. So for the new fiscal year, the outlay for the Ladli Behna scheme is of 36,000 crore, 64,000 crore allotted for the Mumbai infrastructure projects, 9,000 crore for the agriculture sector, around 6,000 government diesel buses will be converted into CNG and LPG. There are announcements related to the airport development, the Navi Mumbai airport, which is scheduled to start from April 2025. This has been announced. 7 new business hub will be developed in Mumbai and Navi Mumbai. BKC like business hub would be developed. New logistic policy will also announced in the budget. One major announcement related to the increase in taxes is related to the CNG vehicle. So there will be 1% more tax on the CNG vehicle. Other than that, EV vehicles costing above 30 lakhs will attract a tax of 6%. So through this, government aim to achieve government overall revenue will increase by 150 crore. So these are the main announcement in Maharashtra's budget.
Well, thank you so much, Anurag, for getting us all those details. Well, yes, a lot of these proposals in Maharashtra budget, and specifically, let's watch out for the auto companies, and M&M could be one of the key stocks to watch out for, given that 6% tax could be levied on EVs over 30 lakhs, which was actually zero under the bracket of zero tax as of now. So let's see how the stock reacts today. But moving on to another story, wherein Chief Public Relations Officer of Northern Railways, Himanshu Shekhar Upadhyay, spoke to Sameer Dikshit about the preparations and arrangements made by Northern Railways considering the busy Holi season. Let's go across and listen in.
देखिए स्पेशल ट्रेन्स की बात करें, अनाउंस्ड स्पेशल ट्रेन्स की, तो अभी 400 से ज्यादा ट्रिप्स अनाउंस कर चुके हैं हम लोग. इसके अलावा बहुत सारी ऐसी ट्रेन्स हैं जो अदर रेलवेज द्वारा भी चलाई जाएंगी, वो इसमें ऐड नहीं है. और हम आवश्यकता पड़ने पर जनरल स्पेशल ट्रेन ऑन डिमांड चलाएंगे, वो भी इसमें काउंट नहीं. तो किसी भी कंडीशन में 400 से बहुत अच्छी खासी ज्यादा संख्या होगी स्पेशल ट्रेन्स की.
इसके अलावा हमने देखा है कि जो हाल में नई दिल्ली में एक दुखद घटना हुई थी, उससे बहुत लर्निंग लेसन हमने लिए हैं. होल्डिंग एरियाज डेवलप करने की बात है ताकि क्राउड है उसको आप मॉनिटर कर पाएं. होल्डिंग एरिया पर किस तरीके की तैयारी?
देखिए सभी अति महत्वपूर्ण और महत्वपूर्ण स्टेशन थे. महत्वपूर्ण मतलब जहां ज्यादा संख्या में लोग आते हैं, फुटफॉल ज्यादा है, वहां पर होल्डिंग एरिया बनाया गया है. नई दिल्ली, आनंद विहार, मतलब और वैसे स्टेशनों की बात करें, लुधियाना, लखनऊ, वाराणसी, अयोध्या, ऐसे कई स्टेशन हैं जहां इस बार होल्डिंग एरिया डेवलप किया गया है. और जहां होल्डिंग एरिया पहले से डेवलप होता था, उनके एरिया में बढ़ोतरी की गई है.
इसके साथ ही एडिशनल सिक्योरिटी स्टाफ भी, क्योंकि ये स्टाफ का डिप्लॉयमेंट भी एक बहुत बड़ा चुनौती था, क्या इस बार हमने उसमें कोई सुधार किया?
देखिए नई दिल्ली की बात करूं, मैं स्टेशन स्पेसिफिक बात करता हूं. नई दिल्ली में 72 एडिशनल सिक्योरिटी स्टाफ की तैनाती की गई है. इसके अलावा अच्छी खासी संख्या में रेल सेवकों की भी बढ़ोतरी की गई है तैनाती में. आनंद विहार में 37 और निजामुद्दीन में करीब 40 के आसपास एडिशनल सिक्योरिटी स्टाफ की तैनाती की गई है.
Alright, and with that, it's time for a very quick breather on the show. When we come back, we'll get you some more news and updates, so don't go anywhere. Welcome back. You're watching Market Cafe on ET Now, and it's time now to get you the futures and options roundup. In fact, Ansh is standing by with just that. Ansh, over to you.
Starting with Nifty first, Nifty took a very strong resistance around that 22,700 mark to snap its 3-session gaining streak. Also, if you can see in chart, then it has been taking strong resistance at that 22,600 to 22,800 mark. Now, this is the same area which coincides with its previous gap down area. So, this continues to stay as a hurdle. Unless until we don't give a decisive breakout from this level, we can expect some down move here. Now, if you talk about index options, then here also we are seeing that even option traders are agreeing with the same level. They are doing very strong call writing at that 22,700 mark, indicating very strong resistance around this level. Now, if you talk about Nifty Bank, then Nifty Bank has been declining for second consecutive session, and even this index is taking very strong resistance at that 48,800 mark. So, unless and until we don't go beyond that, one can have some negative approach here. Also, in index future, we are seeing that open interest has gone up by around 0.3%, indicating short build up. If we talk about FI position, then even they seems to be getting cautious because they have a net added short position, due to which the total long position has slipped lower from 18.5% to 18.1%.
All right, thank you so much, Ansh, for getting us all those details. So let's see whether or not Nifty break those levels of 22,600 on the upside, but giving the indication from GIFT Nifty looks a bit unlikely. But there will be a lot of stock-specific action, so let's get that list of stocks that will be in focus today, and Varun is standing by with that. Take it away, Varun. Good morning.
Good morning, Shishri. So let me start with BEL, because the company has received fresh orders of around 843 crores, and with this, in the current financial year, that is financial year 25, the total order book now currently stands at 14,567 crores. Ashoka Buildcon, the company has received letter of acceptance for project to Maharashtra State Electricity Transmission for the total cost of around 312 crores, and this project is to be completed in 18 months. Syngene International, the company has made a small acquisition of a manufacturing unit in the United States, and also the company would be investing around $56 million in the US facilities of its subsidiary Syngene USA Inc. ICICI Bank, NCLT, has actually passed 2 orders in connection with the scheme of arrangement between ICICI Bank and ICICI Securities, and actually it has dismissed the appeals filed by the minority shareholders. Hindustan Zinc, there was a board meeting yesterday, and actually the board has approved raising around 500 crores, but this would be majorly through debt. City Union Bank, the bank has actually opened 3 new branches in Tamil Nadu, and with this the total number of branches are 848. Aditya Birla Capital, the company has made around 300 crores of investment through right issue in the equity shares of Aditya Birla Housing Finance, and also keep an eye on NTPC, because the group would be investing around 96,000 crores in Chhattisgarh. That is the update that the group has given.
All right, then thanks, Varun, for getting us that update. So there you go. That's the list of stocks to be watching out for. But let's get you some commentary then. Top global voices remain bullish when it comes to India. Chris Wood calls India the best structural story. You do have Jim Walker also saying that policy stability is making it a standout time to double down, and Florian Neto also sees India's fiscal path as strong but finds Smith's pricey at this point. Vivek Paul, of course, also bets big on India's AI pivot, so lots of commentary about dollar's dominance fading as well as India's story.
Given India's already corrected a lot, it will fall less. But the key market that will outperform if the US market's going down, well, there'll be the two markets which have got a chance of outperforming in the nearest. Well, they have been outperforming year to date, and they can do so more, I would say, are China and India. So China, I've increased my position in China in the last few months. China bottomed last September at about 8 times earnings. And although China is not booming, the Chinese market can double just on Chinese consumers going from pathologically cautious, which is what they were last year, to moderately cautious.
The state of policy generally, so monetary policy, fiscal policy, and exchange rate policy. India looks to, I said this in a report that went out yesterday to our clients, that India looks better to me now than at any time in the last 30 years in terms of policy stability. You know, I've said to clients this week that this is the time to absolutely double down on the long on India, go much, much longer. And although worry about the valuations in the Indian stock market, my view is that economic growth is going to take off from here, and those valuations will be very quickly supported by corporate earnings and by economic growth.
We do feel that the valuations that we are seeing on mid-cap is still a bit expensive compared to what we are seeing from an earning revision ratio on the market. Of course, you can selectively find some stocks, but in general, we do feel that now on the large cap, most of the resit on the valuation has been happening already. The Chinese rally is a tactical rally for now, in our view, but it can become more sustainable. So the question is on the leadership. And we do feel okay having an overweight on India and an overweight on China today in our portfolio. The overweight on China is not sustainable yet, and earnings there is not good enough yet. Okay. So there is good prospect for Chinese companies to deliver more because the business environment is evolving.
Structural opportunities are sizable in India. So if we were thinking for anybody with an investing horizon 5-10 years out, we would be building portfolios today using our core IP where you'd hold a greater allocation than a benchmark weight. And that's true for the bond market, that's true for the equity market as well. And that's a function of structural dynamics being positive for India. But on the structural side, the demographic sort of forces underpinning India are really strong. Most of the developed markets, China, are going to experience a shortfall in working age population over the coming 20 years. India's going to experience a big gain in working age population in the coming years. And you think about the geopolitical dynamics that we're in now, a multi-aligned country such as India is likely to benefit from that sort of environment more in the future.
Base case for now is that the same thing will happen as happened in 2016. That is that the dollar peaked when Donald Trump entered the White House. That's what happened in the first Trump administration. That's my base case today. It's also a reality that Donald Trump doesn't want a strong dollar. So that's my base case. So I'm hoping that the tariffs do not prove to be as big a deal as currently threatened. But if I'm wrong on that, the tariffs in the short term will be inflationary. In the longer term, they'll be negative for growth.
I mean, that's exactly the kind of range that I would be looking at when we look at past recessions in the US and slowdowns in the US. 10 to 15% on the dollar as a correction is not at all unusual. And that's really been our forecast, unfortunately, too long, that there was going to be a slowdown in the US and there would be a significant dollar correction before that slowdown really materializes. But I think, we could easily see a 10% correction and then a bit more in the US dollar over the course of the next 9 months or so.
You may see that the euro has been moving 5% already, appreciating. The yen as well have been moving 10% over the last 3 months. So the dollar has been depreciating in trade weighting terms, but not versus some specific EM currencies. Second point, we are strong believer, and it's part of our outlook for this year, that the US performance, the way the design of it was not sustainable. It was too concentrated, lower breadth, and indeed those stocks, those Max 7 stocks, deserve to perform well because they have been having strong guidance, strong earnings, high bar, and they have been matching the bar or exceeding the bar. But we do believe now that the S&P will perform less than other markets because S&P the performance should broaden to other stocks and other sectors.
For the long end of the yield curve in the United States, we'd be a little bit more cautious on the long end of the yield curve than we started the year.
Can you break long end for our viewers? What does long end mean?
Sure. So if you're thinking about sort of 10-year and beyond maturities, we would see, because we've seen a material sort of decline in yields more recently, we think that when we get towards the end of the year and beyond, we will see yields at the long end having some upward pressure. Because if you take into account all of the story that we're talking about, yes, there's more growth concerns in the near run in the US than there were at the start of the year. But at the same time, the inflationary pressure and the backdrop that we've been talking about isn't going to go away anytime soon.
All right, but with this, it's time's up in this additional Market Cafe. It's a goodbye from me and Shreyansi and the entire team. Thanks so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.